Time now for our hot picks. Our next guest focuses on the AI and robotics sector. Here to give us his hot picks is Zeno Mercer, head of robotics and AI research at VettaFi. And Zeno, thanks very much for joining us.
Thanks for having me. How are you doing?
I am good. Let's get right into it. Foxconn is the name probably everybody recognizes it, but trades under a different name, doesn't it?
Yeah, trades under Hon Hai, based in Taiwan. A lot of people look at it, if anyone is familiar with it, they're probably most known for their relationship with Apple. So blue chip maker of iPhones for blue chip Apple. Over the last several years, though, they've really started to expand on that presence into additional blue chip opportunities in the world of physical automation and control, and let's call it creating things and making things. And that's a very precise process, very intricate. And so they really are one of the leaders, and they're only $100 billion market cap. So when you think of kind of the opportunity ahead, I'll break it down a little bit. So they've made tremendous progression of new customers and new segments and new opportunities. So they've expanded beyond consumer and iPhones to EVs to NVIDIA servers. They're also getting involved in other areas like hospital robots. So we're seeing addressable market expansion. Alongside that, we're seeing margin expansion as they're getting into better product mix where their value is, they're able to deliver more value and capture more value. They're also expanding geographically, so they're benefiting from the reshoring happening, whether expansion into Canada, China, or India, or ex-China, India, Vietnam, Mexico, kind of this sovereign supply chain and resilience, whether it's for manufacturing or many other industries, they are playing a big part in that role. And so one last thing about them is while this opportunity is expanding, sales and top and bottom line are growing and expected to continue to grow. They're actually traded, much like many other robotics players, at more relatively muted valuations. So they're at 0.5 forward EV sales and around 17 or 15 times forward price to earnings. So when you're thinking about these robotic players, they really haven't gotten the same type of hype or that artificial intelligence has gotten at to this point, especially if you look at some of the pure play, NVIDIA's or data center players out there.
I know, and they would seem to go hand in hand, though, wouldn't they?
Yeah, they do, and the opportunity is only improving as we're seeing AI start to have more impact into the systems design, so like design, creation, controls, as well as the endpoints of robotics themselves in manufacturing. There's still around 400 million people that work in manufacturing globally on a seasonally adjusted basis, and so there's lots of room for them to incorporate more robotics, even still in the year 2025, into their production to further improve operations.
And any concerns over how big it's moving? Is it moving too big, too much, and too fast, or does it seem like it's controlled?
It seems like it's under control. Like they have, again, as I mentioned, they're expanding geographically and in the new product segment. So they are, what had been maybe a risk to them of being more geographically concentrated in China, customer concentration, that's expanding, and that's also improving margins at the same time. So it really does feel like a perfect storm. A similar company that's a little bit closer to home in Canada would be Celestica, which is also in our robo strategy. And they're also seeing tailwind of electrification, AI data center exposures, and obviously, other system integrators are also benefiting from this tailwind.
All right, let's get to the other two. Hon Hai is up right now. Closed the day up 350 in Asia, and Infineon is next. What do you like about that?
Yeah, so, at the end of the day, it all comes down to physics and power. AI right now is increasingly able to control atoms using bits. Effectively, that's robotics, programming physical reality. It comes down to power and our use of power, the transmission of power. and how that power is used to control data centers and all of the data that's being collected on edge devices and the power that gets to it, to also the actuation of powertrains. So how is power most efficiently being used? So not just the source, but everything that comes after that. Infineon is an excellent lens into that, with exposure to both AI and robotics. So as an example, they're partnered with NVIDIA to help with their latest 800-volt data center. So these massive data centers require more energy efficiency because that's a cost, right? It's a cost function. And so data centers are a cost to a means to an end of providing AI services. And so again, AI and robotics don't really care about the power source. They want reliable, cheap energy and efficient use of it. And so Infineon has their own proprietary wide band gap semiconductor solutions in silicon carbide, gallium nitride. They're involved heavily in automotive powertrains and controls. They have Tesla as a customer, and they're also involved, increasingly with players like NVIDIA. So
I'm going to jump.
It's kind of this.
I'm going to jump in there, Zeno. I don't want to cut you, but I want to get your last one in before we're almost out of time. Okay. Teradyne. I know it's a fun, exciting time in this industry, but let's get quickly to Teradyne before we go.
Yeah, so Teradyne sits at the intersection, again, of semiconductor and robotics. So we're really liking at Robo Global and VettaFi the companies that have exposure to both of these. So if we talk about AI bubble or opportunity ahead in robotics, let's talk at longer duration OpEx of artificial intelligence. We like players like Teradyne that are involved in chip inspection for these increasingly advanced chips, wafers, and system design. So they've got customers like NVIDIA to AMD to Apple. They're partnered with Taiwan Semiconductor. They're coming out of a cyclical downturn related to this capital spending reset. So it's another strong player that's seeing a cyclical recovery along with new markets appearing. So that's where we're really liking plays right now, is companies that have kind of multiple prongs of exposure and not reliant on one industry or customer or things like that you're seeing a lot of right now.
Okay, perfect. Zeno, we'll end it on that. Thank you very much for joining us.
Thank you.
Zeno Mercer is head of robotics and AI research at VettaFi.